Alan, it's Nokia plus Alcatel-Lucent day 2. Yesterday, we just had the broad outlines of the deal. Today, we have the actual real live numbers, and a couple of things about the deal structure look a little funny. First, why all shares? The combined company will have something close to 8 billion euros in net cash and a big asset to sell in Nokia's mapping business, which could bring in another couple of billion euros. Why do it all with shares? Why not send some of that cash out to shareholders?
I think the reason is that the CEO of Nokia, Rajeev Suri, he would have preferred to keep as much cash on the balance sheet as possible, no matter what. They would like to get their their credit rating back up to investment grade. They're 2 notches below it now, and this may have been a safety issue.
Yeah, and of course, a big feature of the accretiveness of the deal comes from the fact that they're planning to cut interest costs. Yeah. So they're not going to do that, I guess, if they lose that credit rating or don't fail to achieve that high credit rating.
Exactly. And there's more cost cutting that's coming anyway. Remember that Alcatel's already been cost cutting in their program, which in fact ends this year. So that's already underway. Right?
Now, those shareholders at Alcatel are not expressing unalloyed pleasure today. The shares are actually below the price that the exchange ratio of the deal would suggest. So they're at a discount to what they'll get in the deal. What's that all about?
I guess that probably when the news started to filter out yesterday and the day before, investors, shareholders and traders would have expected more of a premium. But in fact, it looks like it's more of closer to an 11% premium, all share. Right. It just clearly wasn't enough for Alcatel shareholders.
So we have now the numbers out there. They're looking for, is it 900 million euros in savings?
That's right.
Operationally, 200 million in interest cost savings. They are doing the deal all in shares. Now, the great criticism of the deal has been that the idea of a American/German/Finnish/French company built out of 2 companies that struggled with their own mergers was all kind of nightmarish. Is this 4-headed monster going to be able to thrive?
The question a lot of people are asking is that, and they're asking, is it really different this time? And the answer might be, it is different. The question is, how much different is it this time? What we've had in the past, we've got a couple of companies that have already been and going through restructurings.
Right.
That's a positive.
So they have practice.
They have practice. 2, probably when the last cycle, particularly when the Alcatel-Lucent thing got going, that merger, really, we had the appearance then of the Chinese giants, Huawei and ZTE, coming into the market, causing deflation. Later, Samsung came in on 4G. Those new entrants probably made a big difference.
They hurt those earlier mergers.
They hurt that, it made it that much harder. Okay. Yes. Now, the feeling is the price environment is, let's say, more benign. Right. And as long as we don't have a new entrant in 5G, possible, but right now not visible, things could be okay in this next cycle of investment if that occurs.
Thanks, Alan.
Yep.